Hey there traders, hope you guys are all well. Hope you guys had a brilliant Christmas and New Year's. I certainly did. So in this video guys, I just want to take you through a setup that I took yesterday on the Nasdaq. And I just want to show you how the setup actually works and how the market, once you understand how the market moves and how market makers trap traders and how they actually confuse traders and put traders on the wrong side. Once you understand the liquidity and understand what the market makers are doing, then it makes your trading a lot more easier. And you can find really good risk to reward setups, based on waiting for these sort of setups to actually set up, throughout Asia and a little bit into London sometimes. But just, the purpose of this video is to actually just show you how to actually wait for trades to set up and plan your trades better instead of just diving into setups, and just having a deeper understanding into how the market actually works, especially from a day trading perspective. So I hope this video helps guys, and I will catch you guys on the inside. Alright guys, so I'm just going to demonstrate this to you right over here. This is going to be a short video, but ignore the lot size. What we're trying to do here is just really deep dive into the actual setup itself and plan our trades better and understand liquidity, understand how the market moves, and just look for setups that really offer good risk to reward and just really understand what's happening in the market before we take trades. So as you can see here, this is a trade I took. It turned out to be about a 1 to 2.5, maybe a 1 to 3 risk to reward ratio trade. So as you can see, during Asia over here, the market put in a bit of a range over here, right? A high and a low. So when I saw this, I came into the market was pretty much over here, in this range. So what I saw is the market breaking out over here. All right, so right over there, the market broke out. So what is that doing? That's basically triggering breakout traders to get into the market. Now, breakout trades do actually work. So you can see over here, that was probably about a 10-point little scalp if you took that as a breakout. So basically if you took this little breakout over here. But okay, if we understand that, we can see the market then, it was a failed breakout, so it was a fake out, and then the market went back inside the range. So the market went back inside this little range over here. Okay, so what does that mean? That means they stopping out the breakout traders, who are these guys here. Okay, and they also, what they're doing then is they're also stopping out people who are short from this range over here. A lot of people here that went short. So they're getting breakout traders in the market, and they're also stopping out retail traders who have gone short. Then what they do is they bring it down back inside this range. And what they do then is they make the breakout traders panic. Okay, and they stop out breakout traders. And then what happens is they also get retail traders short with this big red candle. Okay, so once they do that, then that generates more liquidity on the top here, because all these guys that are short from here, all their stops are going to be above there. So then they bring it back inside the range over here, and this is when I got interested in taking the trade after seeing this little pin bar. So once I saw that pin bar and I saw it followed up by a nice green candle, all right, then I put a limit order over there, and I decided to go long, put my stop just below the range. And then you can see I targeted the liquidity of these traders here, because a lot of traders would have put their stops above above this high over here. Okay, so I was targeting that liquidity above there. So just understanding, letting the market develop throughout the Asian session, maybe even a little bit into London session. It all depends, you just let the market paint a picture throughout the day. Don't just hop into a trade. Let the market build up liquidity on either side, and just look for good risk to reward setups like this. Once you understand the concept of how the market's actually set up, and how because the market makers are always trying to basically confuse traders. They're always trying to put traders on the wrong side. So once you understand where traders' stops are, where the liquidity is, and where most likely they are going to go, then you can find yourself more often in these type of setups, and and basically going for retail traders stops with the actual market makers. So I hope this video helped, guys, and I will catch you in the next one. Have a good start to the year. Maybe this setup will set you up for the new year, or just give you a better understanding of how markets move. Cheers.